Hello everyone, this is Tina, guest market analyst from FPG. Today is 5th June, Thursday. The US ADP employment data showed that US job growth fell to the lowest in 2 years in May, and the US Services PMI contracted for the first time since June 2024. Weak economic data strengthened the odds that the Fed would cut interest rates for another 2 times this year, sending the US dollar down. Elsewhere, the Bank of Canada kept the interest rate steady for the second consecutive month due to the tariff-driven inflation concerns. Also, the European Central Bank is widely expected to cut its interest rate again later today, following cooler than expected inflation data. The US dollar appears to weaken further against other major currencies globally. In the following video, I'm going to talk about the market trend of the euro against the US dollar and the dollar against the Canadian dollar. Let's get started. The first one, let's have a look at the euro against the US dollar. So the euro against the dollar has been moving in this uptrend lately since beginning of last year. It faced resistance around 1.15 and has the support around the 61.8% Fibonacci retracement. However, I think this conjunction, markets are cautious about the trade talks between the US, China, and other trading partners. At the same time, the US economic data shows signs of a slowdown in the economic growth. Once the Fed cut the interest rates again, it may set US dollar down, but rate cuts would support the positive economic outlook. The most important thing is still the trade negotiations. If the White House softened its tariff stance, it would cause a sharp rebound in the US dollar again. So from technical perspective, we have to watch out this resistance level just above 1.15. Here, stochastic will possibly form a bearish divergence. In the price, previous high might be higher than the current high, and in stochastic, the previous high is almost even with the current high. If here form a double top, this trend could be upended. Immediate support will be still on this uptrend line, and the near-term key support will be falling on the 61.8% Fibonacci retracement. Once it's break down below here, the pair might conclude its uptrend and reverse down. The next one is US dollar against the Canadian dollar. Here I'm using a weekly chart to see this long-term trend. So since August 2021, this pair has been moving this uptrend. Now it shows signs of potentially broken down below this uptrend line. The long-term uptrend might be ended here. Another sign is that the MACD is falling below this midline. However, stochastic is deepening in this oversold territory. So in the near term, a rebound might be expected. If it rebounds and go back to above this uptrend line, it could continue its uptrend. And in long-term view, there is a triple top here. So I would expect that US dollar might, in the long term, would weaken against Canadian dollar. So this is today's technical analysis video. Thanks for watching. See you next time.